Good afternoon everyone and welcome back to another monthly analysis video for March. Today I'm going to be covering a crude oil forecast by running over the recent supply and demand news events which has set the tone for where this market is heading. We've had some really pivotal news this week to do with a stimulus package, an attack on Saudi Arabia facilities and much more. So I'm going to be breaking down each event and then tying them in with what is happening on the chart. Now I said last month when we were around $55 per barrel that a big move was coming and we're now at $70. So let's see where this market can go next. Now beginning with the news that affects the supply of oil, we've had crude oil hitting its highest level since the beginning of the pandemic. That was on Monday after Yemen forces fired drones and missiles at Saudi Arabia sites. They did that on Sunday. Now, as a speculation for oil supply falling, as we know price increases, and price actually exceeded $70 per barrel. And since then, Saudi Arabia has said it's thwarted the strike. This has eased supply fears and it's also eased the rally on the chart. So maybe have we seen oil prices top out at around $70 per barrel for March? We're yet to see. Now, we've also got some really important crude oil inventories data out tomorrow, 3:30 p.m. GMT. Last time out, we had an increase of 21.6 million barrels. It's going to be so interesting to see the outcome. This time round, US crude stockpiles are expected to drop, which would be another development that could support prices. I just wanted to touch on the clear undersupply in physical market right now. From this, I'm seeing any dips in oil could be seen as a great opportunity to buy. Now, this is where we turn to demand. And there's one story dominating the headlines really, and that is all to do with this optimism around a global recovery from the pandemic. Now, prices also rose on expectations of economic recovery. This was after the US Senate approved the $1.9 trillion stimulus package deal. This outweighed a stronger US dollar, which tends to normally crimp investors' demand for commodities really. Now, what's important here is the US Treasury Secretary Janet Yellen said on Monday the aid package would provide enough resources to fuel a very strong US economic recovery. This is going to help boost the demand for oil. Everyone's going to be booking their flights for their holidays. It's hard to look past buying oil at the moment with the fundamentals we have in shape, and I think buying the dips continues to be the play here. Okay, so I'm on the chart now, and first of all I want to show you what I meant when I was on about the highest level since the pandemic really. So you can see the start of the pandemic, the very first cases of coronavirus, and when we had these lockdowns in March time in the UK, you can see that price at the moment is testing those levels from when we very first even heard about coronavirus, right? Which shows a really remarkable turnaround and optimism around the global recovery really from the pandemic. Now, I want to zoom in a bit more because that's of the past and we want to focus on price action at the moment. Now, as I said when I went through the fundamentals, buying the dips is my play here. You may have a different opinion, which is fair enough. In my opinion, I like the idea of buying dips. Now, where can price dip from is what I like to be looking at right now. Now, you can see here we have this daily order block, which I'm just going to mark out for you. This order block is sitting at around $65.3 per barrel, and to me indicates a really nice buying opportunity. The 50-day moving average is moving up to around this level as well. A break below this daily order block and the next level that I'll be looking at as our support level, our next order block would be this level here, which for me would be a fantastic discount. It would indicate a break of the 50-day moving average though, so I'm not expecting price to fall back to this level. My focus really is on this level, and I'm going to zoom right in so you can see why I'm thinking of this level. So we had before this order block here, and if I mark our structure right now, the previous high from February 67.6, that was broken. So I'm going to indicate this as our BOS as our break of structure. So we've had this really nice impulse, and what it's left behind is this inefficiency in here. So what I'd like price to do during March, or the rest of March, is fall. Once we reach this level at around 67.2, price should fall quite freely. There's not much support stopping this fall, and then this would make a nice entry into our order block where we can look to buy from. Now if I go down onto I just want to quickly check the relative strength index as well, and you can see we have touched overbought territory not too long ago, last week, and we're approaching it again. So we could see price topping out at around $70, which I'll mark as our, if I just put it there, and what I'm going to do is mark that as our daily take profit for if price was to fall back into this order block, then we could look to buy, and that would be our take profit. 70 is providing resistance at the moment, as you can see. We've had this hammer candle to the downside as well. If I go down onto the 4-hour chart, I zoom out a bit more, try and get a feel of the structure a bit more, you can see that price doesn't really have a reason to retrace too deeply into this daily order block. In fact, it may just retrace into a level a lot smaller like this. There's not much here that can be mitigated. There's not much institutional buying action here at all, in my opinion. So I can delete that, and this is now our 4-hour order block, which broke not just this structure here, which is our daily structure as well, but it also broke this structure, which is our 4-hour. So that's the 4-hour outlook, and then we could probably get an even better entry on the 1-hour. And look, you can see straight away. So I've kept the break of structures in there. I'm just going to delete the moving average. I've kept these break of structures in there because they're still valid, time frame confluence, but again, we can refine this area even further down into maybe something just this small. And the reason for that is from this area, which is refined from the daily to the 4-hourly to the 1-hourly, we've had this nice break of structure there and there, which I'm going to highlight for you as our BOS. Two highs that were broken, really nice support level here. So if price was to run down into this level over the next maybe couple of weeks, then a buy straight out of this 1-hour order block, straight out of the support level, up to our take profit is around a 6.5-hour trade. If we can break above 70, then we're in kind of looking at around 73 to 75 as our next targets. But just for this month, just for March, that's what I'm looking for. I'm looking for this picture. I'm looking for this price to fall back into this area, which is refined from the daily down to the 1-hourly, and then a buy out of there. If you don't want to buy straight off of the support level, then what we would do is go onto the 5-minute chart, and once price runs into this area, this is our 1-hour order block, once price runs into there, we'll be looking for some form of break of structure, some form of pattern that emerges. And I can quickly draw that on for you. If price was to run into this level, say, instead of buying straight away, we might get something like this, like this. So there was our break of structure, here is our entry level, and then we can aim all the way up into our take profit. That's what I'm seeing for oil for March. I'm not a fan of buying right now, especially around the 70 level. It's looking at nice resistance, but looking for buys on the dips. Please comment and share this video, like it, subscribe it, subscribe to our channel. It's really growing nicely at the moment, and we all appreciate all the likes and comments as well. I'd like to hear your opinions on the oil market for March. But other than that, guys, I'll catch you all for the next video, which will be on Thursday. Cheers.